Hello and welcome to another update video about MATIC. On the MATIC chart, the situation is rather unchanged, but as you will remember possibly from yesterday's update, the market or the price already hit the 38.2 retracement level here on the chart. The 80.6 cent level, which is the, basically the beginning of the trading zone here or support zone for wave 2. So essentially what we have on this chart, it's a 5-wave move to the upside in the shape of a diagonal structure. And we highlighted that, okay, maybe we get one more tiny high here, a marginally higher high, or we're already in wave 2. Either way, the main element of this rally was done. I would have liked to see maybe one more high here, but the chart has 5 waves, as you can see. This means that any pullback can be seen potentially as opportunity, and so far the chart has already reacted to the initial support level at 80.6 cents, and this is the 38.2 retracement. We also have the 50% fib level next. That's the next support, 66.7 cents, the golden ratio, very important support level generally, and then the 78.6 retracement, and that is typically the last one. Normally, I mean, even in a bullish market, we normally don't want the price to come down to the 78.6 even, right? It's really the last reliable level for a wave 2 correction, but in a bullish market, oftentimes you don't see the prices get there. In the bear market, we had a few 1-2 setups and the market often did touch that level or got very close. But in a bullish market, you often don't see it. So we have to be very mindful. I can only say that, there's no guarantee or anything, or nobody can predict that. It's not a crystal ball. It just highlights you where the risk is sitting, the technical analysis, and helps you to understand the market structure. The wave 2s can be shallow, but there's no way to predict it. So a reasonable strategy is to scale into these boxes if you want to do it that way. That's up to you. I can't tell you to do it. You have to make that call. It has to be right for your portfolio, for your strategy, for your risk profile. But typically, a so-called wave 2 correction is typically the most interesting structure to trade, because in a third wave, or to get in to find a position at least, because in a third wave, we typically see the most aggressive move in a trend, and that would be the next move, okay? So we should see prices get eventually to $3 plus and higher if the 58 cent level is holding. And that's they are really key levels that you can incorporate into your trading plan. And the 78.6 fib level, as I said, is that 58 cent level. We don't really want the price to get below that, or this assumption, the thesis that I have here, my idea of this chart is basically proven wrong, right? But that would only be below 58 cents. We have to give it that entire space, so don't worry about short-term fluctuations. This is really an interesting setup in my opinion, but of course nothing is guaranteed, All I can say, we've got that 5-wave move to the upside. We've got a 3-wave pullback so far. Now, could the wave 2 be over? Now let's go to the 1-hour chart. So yeah, I mean, technically, we have a 3-wave move down, right? You see that it's a 3-wave move down. So does that mean the low is in? Well, first of all, let's label the subwave structure. I would say this could be an A. This could be a B. Okay, so we have a nice A wave, very choppy and ugly B wave, as they usually are, and now the C wave down. So it appears to me, it looks a little bit as if the market needs another low here. Okay, I shouldn't say needs it, because it's just that a C wave is a 5-wave move, right? So I can only identify 3. Now, I mentioned it in the Bitcoin video, it's a bit of a special thing in crypto that sometimes you don't get that last 4, 5. It's just what it is. And the reason is, especially during rapid sell-offs, liquidity events, the 4, 5 might be hidden in this candle there, okay? So we might actually not get it. But I just want to emphasize, okay, maybe we get another move down, maybe. And that could then complete wave 2. Or it could just be, one second, let me shift that a little bit into place. Or it could just be the A wave. Then we'll get another B and another C. Okay, so I'll put that in white. This would be the alternative you could, well, not really alternative. See, what we need to be aware of is typically a wave 2 has sort of a similar length as the wave 1. Now, this developed over a few months, okay? It might be that in bullish markets, the wave 2 is extremely shallow, so we might not see that length of a wave 2, but ideally, I'd like to see a little bit more of a healthy correction. We have to remember though, again, it's not predictable. In a bullish market, that could be it. That could be it. The market could rally in a third wave. I have to say it very clearly. There's no way to predict it. You just have to manage that with your strategy. Again, you know, all you can do in this, if you trade this structure like that, you could start to add a small position. If the price comes down lower, you can add. And when the price has confirmed the turnaround, you can add. So at least that's just one way of dealing with it, right? To avoid to sit on the sidelines. But yeah, this could be wave 2, but wave 2 could also stretch out a little bit further. We will not know that until we see the structure of the rally. And if the structure of the rally, the next rally, is corrective, then it indicates another low will happen. Yeah, so, but overall, we are now in an opportunity zone, or we were, but, you know, it's still sort of very close to it. Just remember that corrections can be shallow. I would like to see, if we talk about ideal structures, a little bit more of a complex ABC structure in wave 2, but we'll see how it develops. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. You'll find the links in the description. Thanks a lot for watching. Bye-bye.